Meta Platforms stock has been on a tear in 2024. The stock is trading at $592 per share as of this recording, and it started the year trading around $350 per share. Of course, I'm happy about that because Meta Platforms was one of my top stocks to buy recommendations in 2024, and investors who followed that recommendation have made a great deal of money on Meta Platforms stock. But at this point in time, what is Meta Platforms stock really worth? I'm going to conduct a discounted cash flow valuation of Meta Platforms stock to determine if the stock is still undervalued, fairly valued, or overvalued using this specific valuation method. Of course, there are other valuation methods you can use. This is one to add to your toolbox to include with all of the others to come to a conclusion on whether or not Meta Platform stock is worthwhile for you. So let's get into this valuation. I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, to make this stock price estimate, I need several numbers, and I'm going to go one at a time here, sharing with you the numbers I need and where I'm getting the numbers from. So this is Y charts here, the current market price, $592 per share. I need Meta Platforms free cash flow for the trailing 12-month period, $49.54 billion. The next number I need is the company's average shares outstanding or the diluted shares outstanding, and the latest update was 2.629 billion. You can see that falling in recent years, and this is because Meta Platforms has been buying back its stock, and that's lowering the number of shares outstanding, which then has the effect of increasing the earnings per share because profits are split among fewer shares. Next, I need the company's total long-term debt, and it stands at $18.4 billion. You'll notice here in the last year and a half, Meta Platforms has borrowed roughly $20 billion. And this isn't because the company needs the money. This is something, and if you've been watching my other videos on this discounted valuation method, management teams like to lower the company's cost of capital. And when you're borrowing money for a large tech stock like Meta Platforms with great profit margins, great competitive advantages, an excellent financial balance sheet, great cash flow from operations being generated, you can borrow money at relatively low interest rates. So the cost of debt is much lower than the cost of equity. And so you try to borrow a little more money and then buy back some shares so that you shift your balance of equity and debt in favor of debt, and that lowers your weighted average cost of capital, which we're going to see in my valuation, how important the weighted average cost of capital is in determining shareholder value. All right, Meta's market cap is 1.5 trillion as of this recording. It's roughly tripled in a year and a half to demonstrate how successful Meta Platforms has been in turning around the investor story in the last year and a half. The cash and equivalents balance for Meta Platforms sits at $32 billion. And I'm going to need Meta Platforms beta, which stands at 1.22. I'm getting this from Yahoo Finance. And finally, to estimate Meta Platforms growth in free cash flow, I'm going to use the Wall Street estimate for Meta Platforms earnings per share growth over the next 5 years. According to Wall Street, they think Meta Platforms will grow its earnings per share at 13.6% for the next 5 years. All right, now that we have all the numbers and estimates and assumptions we need to make our discounted cash flow valuation, we can start to make our calculation. Let me draw your attention here to free cash flows for 2024 at $49.5 billion. That's the trailing 12-month free cash flow number for Meta Platforms. That's going to be the base where I'm going to grow the estimated future free cash flows going all the way out to 2035. The growth rate I'm going to use are 3. The first growth rate is the 13.6% that Wall Street expects from Meta for the next 5 years. I'm going to use that number equally as derived from Yahoo Finance. I'm not going to make any adjustments to that. That is the growth rate I'm going to use for the first 5 years in expected future cash flows, year 2025, 26, 27, 28, and 29. Starting from year 2030, I'm going to use a transition period growth rate of half of that 13.6%. So in other words, 6.8% between 2030 and 2034. Finally, I'm going to forecast the company settles down to its long-run growth rate of 6% from 2035 to infinity. So if we bring the present value of those future cash flows back to today, we get a present value of cash flows of $517 billion for Meta Platforms stock. Now, for the cash flows between 2035 and infinity, we can employ the terminal value calculation, which takes the cash flow 1 year ahead, divided by the weighted average cost of capital minus the growth rate, and we get a terminal value of 2.853 trillion. Discounting that back to today, we get the present value of terminal value of 1 trillion. The weighted average cost of capital I'm using is 10.84%, and I'm applying a cost of debt of 6.5% for Meta Platforms and a cost of equity of 11.32% using the capital asset pricing model with the beta of 1.22 and a mix of cost and a mix of debt and equity, 90% equity and 10% debt, even though the company's market capitalization is much higher than the company's total debt. So the percentage of total debt to equity is much smaller, but I've adjusted it upward because you'll notice here Meta Platforms, the target capital structure appears to be a larger percentage of debt for a smaller percentage of equity because that lowers the overall weighted average cost of capital. As you can see, the cost of debt is 6.5%. Cost of equity is almost twice that amount, 11.32%. So to a certain degree, the more the company borrows, the lower its weighted average cost of capital. Now, that only works up to a certain point. If a company borrows too much money, the cost of debt starts to increase exponentially. And so they have to find that sweet spot that keeps its weighted average cost of capital minimized. You can't just go on a borrowing spree and continuously lower your weighted average cost of capital. At some point, when you start to borrow too much money, you become riskier. Lenders charge you more interest for your debt and thereby increasing your total cost of capital, no longer making it beneficial to borrow more money. So CFOs of companies, management teams know how to do this very, very well, and they minimize that weighted average cost of capital to the best of their ability. All right, so now let me draw your attention to the company's value of operations, which we get by taking the sum of the PV of the terminal value and the present value of free cash flows. And then to that total, we need to add the company's cash balance, which stands at 32 billion, subtract its debt of 18.4 billion, and we get a value of equity of 1.551 trillion. From that number, we divide with the total number of shares outstanding to get an intrinsic value price per share for Meta Platforms stock at $589.99, which if we compare with the current market price, it's very close. The current market price is $592.59. So it appears that the assumptions and estimates I'm using to evaluate Meta Platforms stock are the assumptions and estimates that market participants are using to evaluate Meta Platforms stock. There's a match between my estimates and market estimates, so it appears. And so the price suggests that Meta Platforms is trading at a fair valuation according to this valuation method. But when I incorporate all of my other valuation methods and all of my other analysis of Meta Platforms stock, I came to the conclusion that Meta Platforms is still undervalued. Remember, this is just one element of a toolkit I use to evaluate publicly traded equities. In fact, I have a framework, a 6-step framework I use to evaluate publicly traded equities. And so this is just one step in my 6 steps. So this one step suggests the company is fairly valued. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock. And this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.